Shifting focus away from the US to India, where India's Reserve Bank of India Governor Shaktikanta is speaking. Let's cut across live and listen.
The moratorium was announced that the RBI will come out with a scheme very swiftly and very quickly. And as you would have seen, swift action has been taken by the Reserve Bank of India and by the government. There has been very active coordination between the Government of India, the Finance Ministry, and the Reserve Bank. If I can just recapitulate the dates, the moratorium was announced on Thursday, 5th of March. The very next day, 6th of March, the draft scheme was put out in the public domain, and the final scheme was notified again on the next Friday. That is, between Friday and the next Friday, on 13th of March, the final scheme, the final reconstruction scheme, has been notified by the Government of India. The lifting of moratorium is taking place after 3 working days of putting the final scheme in, after notification of the final scheme, and that will be on Wednesday, 18th March at 6 p.m. The moratorium gets lifted, and the new board, as you would be aware from the notification, the new board will assume its position, and the office of the administrator will cease to exist on 26th of March. So as you can see, this has been a very swift and fast action, perhaps a record of a sort. With regard to the restructuring scheme which has been notified by the government, I would like to say that it is a very credible and sustainable restructuring plan. We do believe it is credible and it will sustain in the years to come. It is also an instance, perhaps the first of its type, it is also an instance of public-private partnership for revival of a private sector bank. Apart from the State Bank of India, you have leading private sector banks which are major stakeholders in the banking sector, both the public sector segment led by the State Bank of India and major private sector players, major private sector banks have joined hands to revive the Yes Bank and to take the restructuring scheme forward. In that way also, it is perhaps the first of its type. And in India, on earlier occasions, whenever there was failure of a scheduled commercial bank, the usual method has been amalgamation of the failed bank with a larger entity. This time we have not done so. This time the identity of the Yes Bank, the bank which is in difficulty, the identity of that bank is retained, and the investors are the banks which have come forward. So the participation of private sector banks in particular demonstrates the confidence of major players in the banking sector in the revival plan. So that is therefore, in this background, I would like to state a point which I have said earlier, which we had told in our press note also earlier, that the depositors' money is absolutely safe. I would take this opportunity through you to convey to all the depositors of Yes Bank that their money, their deposits with the Yes Bank are completely safe, and there is no reason for any undue worry, or there is no need for rushing into withdrawing their deposits or their money which is with the Yes Bank. Their money is safe. In India, if you go by history, never in the banking history of India, in a scheduled commercial bank, the depositors have never lost money. Their interests have always been protected. The present scheme also protects the interest of the depositors. So I once again reiterate that the depositors need not worry. Their money is safe after 6 p.m. on Wednesday, which is 18th of March. They can draw their money, but there is absolutely no reason for them, no need for them to go for panic withdrawal or for getting unduly worried. Their money continues to be safe. I am again and again saying this because this is very important, and the whole scheme, the underlying theme the main point on which the scheme is based on is to protect the interest of the depositors. And I also would like to say that two more points, especially in the light of action by certain authorities, especially at the state level, to taking decision to withdraw money from private sector banks. The Reserve Bank of India, from RBI, we have written to all state governments, impressing upon them that the Indian banking sector is sound and safe, and Indian banking sector includes the private sector banks. We have specifically indicated that the health of the banking sector, including the private banking sector, is sound and safe, and therefore there is no reason for state government authorities to withdraw deposits or to take deposits or to keep away from the private sector banks. Private sector banks are an important component of our banking sector, and therefore it would be necessary that in the interest of financial stability, in the interest of banking stability, that the various authorities, both at the central and at the state government level, they continue their confidence on the private sector banks. I'm also happy to note that during all these months, when there were stories about Yes Bank having increasing difficulty, large number of depositors of Yes Bank have remained loyal, and they are still with the Yes Bank. I do expect and appeal to them to continue their confidence and loyalty to the Yes Bank. And you have the big names of Indian banking sector which are there participating in the revival plan for revival of the Yes Bank. And we have also, I think the one next point I would like to mention is that the Yes Bank has enough liquidity to meet any requirement. If, I repeat, if there is a requirement, the Reserve Bank will provide necessary liquidity support to Yes Bank to meet its requirements if such a requirement arises. So that is a comforting factor for the depositors, that the Reserve Bank will support the Yes Bank with liquidities if it is required. And we are quite, at this point of time, our interaction with the investing banks, the state bank and the other private sector banks, our interaction with them gives us the confidence that the revival of Yes Bank will work out. It's a sound revival plan and it's a robust revival plan. So before I conclude this part relating to Yes Bank, I would again reiterate the depositors to remain confident that their money is safe. Now coming to the COVID-19 outbreak, I would like to state as follows. The COVID-19 outbreak, now a pandemic according to the WHO, is rapidly evolving into a human tragedy, disrupting economic activity in a wide swath of affected countries. Financial markets across the world are experiencing intense volatility, and financial conditions have tightened worldwide. Policy authorities have responded with emergency measures, and more recently, advanced economies have coordinated large policy rate reductions with activation of swap lines as well as quantitative and credit easing. Tentative estimates of consequent loss of global growth are currently placed in the range of 0.4 to 1.5%. India is not immune to this pandemic. Already more than 100 cases have been reported. Efforts are being mounted by the government on a war footing to arrest the spread of coronavirus through social distancing, preventive measures, and by issuing health advisories. COVID-19 could impact economic activity in India directly through trade channels, especially in electronics, drugs, pharmaceuticals, chemicals, etc., in which the exposure to China is relatively high. Second round of effects of the pandemic could operate through a slowdown in the domestic economic growth. And it would obviously be a result of a side of a synchronized slowdown in global growth, and as a part of that, the growth momentum in India also would be impacted somewhat. How much we're going into the monetary policy meeting, as and when it is held, we will take a clearer view of the impact of the global slowdown on the Indian economy. So I would like to say that the second round effects of pandemic could operate through the slowdown in global growth. Already sectors such as, I'm now talking about global as well as India, already sectors such as tourism, airlines, the hospitality industry and domestic trade and transport are suffering a loss of activity. More immediately, spillovers are being transmitted through finance and confidence channels to overseas and domestic equity markets. Forex and bond markets are also not immune to the current volatile conditions. There is considerable uncertainty about the duration of the pandemic, and the currently available estimates of its adverse effects will undergo sizable revisions if this coronavirus persists longer or if it gets contained much earlier than currently believed. It is important to ensure that policy reactions are carefully considered and calibrated so as to assuage sentiment and instill confidence. In this context, the Reserve Bank has been taking several calibrated measures over the past few days to ensure that financial markets and institutions remain sound and resilient, and also to build confidence more generally in the financial system. In fact, the lack of response to our 7-day repo auction of rupees 25,000 crore, which was conducted on March 13th, has reassured us that domestic liquidity conditions remain comfortable.